Well, thanks for being here. I know in your last video, the one that you actually streamed, like in your big comeback, like 2.5 weeks ago. There's actually been a lot that's
Mhm.
happened between now and then. There was bullish setups then. There's some big bear setups now. So I guess let's dive right into it.
So, yeah, exactly what Jack was saying earlier. Right now, I view the current market condition as a really, really big point of indecision. And if I could get this pen away from my screen, that'd be sick. Oh, mouse. Okay. Can I move you? Yes, I can. Okay. Um, and this is for a number of reasons. The way that I view the market is a little bit different than the way a lot of people do it. And I'm not to say that mine is like better or worse or whatever. It's just the way that makes sense to me. Um, and the way that I view it is I view it as like a very holistic market. So like I view it not just from crypto, not just in equities, whatever. I view it as like this giant ocean, and the tide is rising on different coasts on this like landscape, right? And the water can sometimes flow to equity, sometimes the water can flow to crypto, sometimes it flows to both. But the biggest thing to take away is that anytime you have a bullish market environment for equities, for crypto, for anything, it is almost always anti-dollar. And what I mean by that is if we have dollar, which the ticker that most people use is Dixie. So it's not exactly the dollar, but what it is like the dollar index. This is a D, by the way, not an O. Can I do this? Yes, cool. All right, D. Oh my God, D X Y. It's sloppy. Sorry.
You're doing great. You're doing
Um,
great.
yeah. So we'll go ahead and go back to here because I like trading views stuff. Dixie.
There you
Okay, better.
go.
That's the ticker. And what it is, um, so the 10,000 million foot overview of what Dixie is, it's just a general weighting of the dollar versus every other major world currency. So the general takeaway is that when you have a bull market on Dixie, that means that the dollar is gaining strength versus other currencies. And typically that also coincides with bear markets in things like equities, crypto, metals, usually, whatever, and vice versa. So, like, if, for example, dollar is moving up, that usually means that there's a stronger demand, right? Because things move up because demand outweighs supply. And if you have a strong demand for the dollar, that means people are selling all their other shit for dollars. They're selling houses, cars, you name it, right? Everything, the dollar is the world currency, right?
Mhm.
So I particularly watch Dixie like a hawk because that tells me what the macro state of the different, um, the different financial sectors can be. And right now, this is a monthly chart I'm showing you here. The dollar index is sitting on one of the easiest things to see is it's sitting on a major level of support here. So this was a multi-year trading range. All this is a trading range, and it broke out, and this coincided, no surprise, with the bear market from crypto, right? So right around here, we see the bear market really take off. So if we compare the dates, if you think I'm bullish here, we compare the dates here. Beginning of 2021 coincides with the beginning of the topping of crypto here. So here's the
It's like
beginning
Pico
of
top. Yeah, it's like to the wick,
yeah,
basically.
yes, pretty much. And so no surprise, the dollar gained strength, and right around here is when Bitcoin bottomed out ish. So I say ish because it's like kind of there was like all the FTX stuff, but right around November, October of last year is right around it's here. So boom, that coincides with the high of Dixie, and no surprise, the drawdown on Dixie coincided with the uh, the upswing in crypto. So why am I talking about this? When we compare the structure of the dollar to crypto, we're at a really interesting point here. So technically, support isn't confirmed until you have a green close that accepts that support. So right here we see we've got a green candle that hasn't closed yet. And until this closes, this technically isn't confirmed to be support. This would be a throwback to retest. And until this confirms to be support, it's a point of indecision. And so we have about 8 days, 9 days left on the current monthly chart for Dixie. And it's no surprise that, of course, while we're figuring all this stuff out, it's like hyper volatile at a very key point. And so I know I've sent out some bearish tweets, and I probably came across more bearish than I actually am, but it was more to just kind of like to be like, hey, like this isn't the time to be gaining exposure to the market. This is more of a time to be cautious and kind of just watching and waiting. And that's for a number of reasons that we can get into, but that's my stance, and I'm sticking to it.
Okay. No, I think that's good. So quick refresher chat. Dixie is what he has on, or is what he was going over a second ago. That's that chart. And again, there's this inverse relationship between the Dixie and stuff. It's like you're selling your dollars for things or your things for dollars, and there's this kind of like seesaw pendulum thing going on. So I'm with you all day, and I've been watching the same thing. And I also think it's very interesting how we've had this reaction on the Dixie, which correlated with a pretty nasty little sell-off on Bitcoin, if on the daily
Yes.
time frame, But yeah, this is all very fascinating. Yeah, please continue, and then I got a couple questions for you.
Yeah. Yeah. So, um, now, so that this is a point of indecision, that isn't inherently bearish, but what that means is that it's more volatile. So meaning that it's not quite as trendy, in the literal sense, right? So like, for example, on Dixie, if we look at the daily chart, as Jack mentioned, right, we have this very clear downtrend with this upper boundary here. It got violated here, but it's not quite like a strong breakout. And we can see that it's still an overall downtrend, but it's like showing the potential for bottoming behavior. Conversely, on Bitcoin, we see similar sort of things, but in the opposite, right? So we had the strong move up. Oh, my highlighter. We had the strong move up, and it corresponded with, and this is the biggest thing, that I've been really keeping an eye on, is the reaction to the prior high back in what is this, August of 2022. And this is especially concerning because if this ends up just taking out this high, this is typically how bull traps form and how bear markets either resume or test the potential for it to resume. So that could play out in a number of ways, right? So we could see like maybe the potential right shoulder of this massive head and shoulders bottom play out. Like that could be a thing. Like maybe we see a prolonged trading range form. Like we could see something that has the boundaries up here,
I'd love
and maybe
that,
we
to be
see it.
honest, and then
Yeah,
run the lows at
yeah,
some point, and then like spring it
yes,
off. That'd be awesome.
yeah. And this all makes sense. Like if we remove all the trade, like the nerdy like Wyckoff analysis and all this other stuff, and we just think about it from like a very very like 100 IQ play. Like it's like the there's like a bunch of tech layoffs happening right now. Like there's a lot of
Yeah, nothing makes
bad
sense.
things.
Yeah,
Yeah,
yeah.
there's a lot of bad things happening right now, and it doesn't make sense for a sustained bull market to take place now. Now that might change in a couple of like maybe next quarter that changes, right? Like maybe there's the overall job market isn't bad. Like we're I think we're technically net positive employment. Um, Meaning like there's more jobs being gained than are being lost, but it's still like a point of uncertainty that many people are spooked. And so like we can go into some of the reasons why I think there's a case for it to continue if you want, but um, I know you said you had some questions, so
Yeah, well, here's an easy one because it's on the chart. It's like right there in front of our faces. Right, you see the 50-200 cross. You have the golden cross. There's been this
yeah,
big conversation across the whole Twitter sphere and everything about the daily golden cross and then the weekly death cross. And so I think this would be a good opportunity for you to address it, kind of give your thoughts on those two things.
yeah. So if for those who are unfamiliar, in general, there's like this idea of like a golden cross or a death cross, and all a golden cross is you have a slow moving average, and you have a fast moving average, and in trending markets, we can see that like there's and on my chart specifically, I have a 50, a 200, and a 600, and I can go into why I have those specifically later, but what the numbers are irrelevant. It's relative to whatever system you like to use, right? So I find that this works well for me. But the point is, when you have stacked EMAs or SMAs for that matter, so simple moving averages or exponential moving averages, you have a slow and a fast. And in trending markets, you should see either the fast trending above the slow, or in bear markets we see the fast trending below the slow. And when we see a golden cross, that means that we have our slow and our fast crossing from the underside, typically indicating a changing of tides. So here's a couple of examples. Here's a golden cross that started the bull market from 2020 here. And of course, we see the death cross here, which, death crosses and golden crosses aren't like this one size fit all, but it does show you that like the overall trend is not trending, right? Like it's at minimum consolidating. And so what we see here is we see the first signs of this golden cross, which was a few days ago. And this is the first golden cross we've seen since the beginning of the bear market. So there's a lot of hope there that says to us, well, that's at minimum stopping action for our downtrend, right? That shows us objectively the bear trend is currently objectively over. Now this could change. Obviously, this could come back down, and maybe we could recross, which would be pretty shit if that happened. But at the moment, this is an objective tool set that we can use that says, like the bear market is technically over by some metrics, right? And if we look at the weekly, you obviously get a much different picture. But in crypto, weekly charts, like that takes a long time. Like you can have like put things into perspective. The whole bear market we just had all took place while technically in a quote unquote bull market by weekly standards, but daily, yeah, like weekly charts are kind of like you got to take it with a grain of salt, but daily charts are usually pretty good. And so, like I was saying, like the market could like this could easily be the canary in the coal mine that says, oh, you know what? Actually, we're in store for more upside. And we can talk about like some signs that we could look for in a little bit, but yeah,
Yeah.
that's
Yeah.
that's the general
Okay,
take
so
on.
so gun to your head, you have to pick which one you actually pay more attention to. Like you have to say, okay, this one's probably more likely to play out, I guess, for lack of a better word. Would it be the daily or the weekly? Like the death cross or the golden cross? Not necessarily the fact that it's death or gold. I don't care so much about that, but like
Yeah,
the fact that so the weekly, I know it's a higher time frame, but it's the first time we've ever seen it. Also, it's very odd that you have that event simultaneous to so you have this bearish event on the macro simultaneous to a bullish event on the lower time frame being daily. But anyway, I just thought that'd be kind of an interesting question. If you had to pick, which one do you think?
yeah. So if we look at the weekly time frame, like even though it takes for freaking ever to actually manifest actionable like uh signals, if you want to call it that, um there's some really interesting characteristics about the 200 weekly specifically and the 50. So the 200 has historically been a point of uh of accumulation. So like when we had this really textbook Wyckoff accumulation period, this all took place, obviously the 200 is way over here, but if we just extend that a little bit, it's like that was the
Yeah,
base of the accumulation. Similar thing here, right? Similar thing here when we look at like the COVID shakeout, which is also, it's not a trading range, but it is a form of market accumulation. And now when we look at this thing that we're currently in, uh, you could we could potentially that so this is why I'm strongly considering the head and shoulders bottom scenario, because like this makes sense from like historical perspective. Like this is the base of the accumulation, the base of the accumulation, the base of the accumulation. And if we get this nice right shoulder here, it would basically be the neckline of this head and shoulders. So when I look at like the weekly time frame, I I look at it only as to be like a point of like, oh, that's interesting. I don't get any trade signals off of that, except for when we're colliding with things like the 200 EMA. The first time we hit it, we saw a pretty big bounce. This looks small from here, but
Yeah, but it was a
percentage-wise,
big
it's
deal.
big.
Yeah.
Yeah.
And that was
And
the
same
first
thing
big
here.
rally we had seen in a while.
Yes, exactly. So like when I look at things like that, when I actually look at actionable items, like I take it with a huge grain of salt. And more so, I'm looking at it like almost trying to psychoanalyze what other people are doing. Because I know other people are like, if I'm thinking, when I say other people, I mean like institutional investors. They're looking at this and they go, oh, this is historically by equities standards a point to sell your market share. And of course, this corresponded with a pretty semi-aggressive sell off. Or I guess I could just go here. Back here. This is basically when the market hit the weekly 200, and then of course like this massive amount of supply hit the market, and it's just like doing this thing that I've been calling lately called the Cosby sweater, where it's just like doing this sort of thing. It's like not like I don't like how do you trade this? I don't know, but I for like actual actionable signals, I think the daily is way better than the weekly, but you can't ignore like more keystone things that are like golden crosses, death crosses, first time interacting with EMAs, things like that. I know
Yeah.
it was like a long-winded answer to what you were asking, but
No, that's fine. But I didn't hear if I had to choose, it would
if I
be
had to choose, daily all day.
daily. Okay, good answer. Because
Yep.
I'm the same way. I'm the same
Yeah.
way. I think that'd be it'll be really, no matter what plays out, it's going to be one for the textbooks. We're like from here on out, we're going to be like, okay, this is BS, or okay, next time we see this, we need to know like to take it very serious. But like I mentioned earlier, I think it's hilarious how the daily and the weekly are literally happening at the same time. It's not like they're within a month or two of each other, and oh, that's kind of interesting. It is like the day one crossed, the other crossed as well. I thought that was
Yeah,
funny.
yeah. So to follow up on what I was saying about like trusting the weekly, if I saw something like this where like it interacted with this and it closed like a bearish engulfing on the weekly,
Mm.
let's say like hypothetically this sort of deal where we see like this, it runs into the 200 EMA and then bam, it gets rejected with this bearish engulfing. That would be like that would be major red flags, but that's not what we
Mm.
did, or not yet anyway, because we're still 6 days into this week. It could prove to ultimately become that, but if we see a bearish engulfing come off of this, that is a really big sign of weakness in the market, and that's usually a sign that we're probably topped out here for the time being. So like this next week is, I know everyone always says like this is a crucial,
Yeah.
but like this is actually like if ever there was a week to pay attention, it's this one,
Guys,
because we're in.
if you want to know what happens next, this is where you join the paid groups, guys. Come on. Let's
Yes,
pony
exactly.
up.
It's
Let's go.
yeah, like the time for like the clickbait is like this is actually
Yeah,
warranted.
right.
Yeah, like
Um,
and the weekly has been really good with bearish engulfings too, by the way. Like every
okay.
time it's yeah, like every time you see bearish engulfings or bullish engulfings, like those are pretty telling of where the market's going. Like we see one here. Obviously this one, there's a load of them up here, boom, you know, all of these bearish engulfings, obviously that one there.
Okay,
But
and look at the volume profile since like going from that very last bearish engulfing. Yeah, so that's that big spike in volume, and really since then we haven't seen anything like that. And it seems like it's just been kind of down only on the volume profile. What's your read on that with everything slamming its head into key like weekly moving averages?
so not only is this relatively very high, it is absolutely very high. It's the
Yeah,
highest volume Coinbase has ever seen.
that you're talking about that one sell candle because I remember talking about
Yes,
that a lot. Yeah.
yes. This guy, and so when we see things like that, when we think of like Wyckoff in terms, this is what is known as a stopping action. And what that typically means is like stopping action can take many different forms, but this is obviously a major outlier, not only in volume, but a major outlier in terms of spread and the fact that the market just basically just slammed into the ground and just died right
Yeah.
here. It slammed down, boom, and then immediately rejected the sell side. So like this is a really good like long-term outlook and a really strong argument to say like it's very unlikely the market's going to go below this level. It would take, like, what else is there? Like the biggest exchange on the planet turned out to be a fraud. You know what I mean? Like, and
Like literal
and
fraud. Yeah.
yeah,
And the chart painted this really nice textbook kind of falling wedge and broke out of it at the same time. And
yes,
like it's to your point, where are we going to get another worse event or even like a same event? Like what rock is that hiding under where there's the biggest exchange in the world is literally a fraud, full on fraud. Not even like in the colloquial, oh, crypto's a fraud. No, like
no, like an
actual fraud.
actual,
Like
yeah,
Madoff
yeah,
level fraud. Yeah.
yeah, and we're trading above where it was before. Now the thing that has me concerned though is that, you know, I briefly touched on this, is the fact that we ran this high,
Mhm.
you know, like microscopically, but we did, and that's important because when we look at like where all of these people who are short, like where do they put their stops? They put them here. And so if we run this high and we get rejected, that's sometimes, so this is called a liquidity pool, but sometimes that's a really strong indication that we are just rallying up here to just nuke these guys. Like, so if you have, you know, if you want to think about like GameStop, for example, like that was a much larger scale version of this,
Right.
in that it's like there's very predictable liquidation points for very strong entities. And if you can nuke those guys, well, then you could take like a you know, a really big hedge position, or, you know, go net short or whatever. So when we look at the close of the next week, it's going to be really, really important that we don't see this like disgusting bearish engulfing. You know, like if it closes like a little red, like it's not terribly alarming, but like we don't want to see this, you know, like
Yeah.
something like that or whatever.
Some kind of like daily head and shoulders even, you know, where like our current high, that 25K pop, maybe that's the head, you know,
Yeah,
something
I've been
like that.
watching something like, yeah, I've been watching this little uh ascending broadening wedge is what it's called. And it's pretty textbook actually. So like um it typically is a continuation pattern. And it has like a way of calculating it, but the general anatomy of it is like you have two touches on the bottom, and ideally it's more shaped like this. So
Mm-hmm.
there's a really strong possibility that we might even come back down here and come back up. But so far, like volume profile actually looks pretty good. Like it's consolidating. The market's coming upward. It's very well defined here. And what's really good about our current structure is that we're still above the prior high, like this guy right here.
Yeah. And do you look at pivots at all, or is that am I kind of alone on that?
So I no, I don't.
Okay,
But not
that's
because
fine.
I think they're bullshit, but it's just because like I have enough things that I use. And I'm a simple man, Jack. I
Yeah,
like
yeah,
to
yeah.
keep things simple.
Well, this is why I'm asking, because you've covered two things where you're like, hey, this is a key level, and they both just happen to be pivots. Like, it's not going to affect your bias in any way. I just thought that it was interesting how it worked out. So the first is on Bitcoin, the yearly pivot is
Mm-hmm.
literally that line you drew, that horizontal line. It's like
This one?
20, it's like 24.2 or something like that. Yeah. And then on the
Hmm.
Dixie, it's like 104 exactly. It's like where it's like 104.20 or 104.30. It's literally where it can't close. There's like a level the candle can't get above and actually close.
Yeah, like right in here.
No, right. The one here recent, like yesterday, like the candle closed yesterday, how the red candle, yeah,
Yeah, like this level. Yeah.
yeah. So that is the pivot as well. So what would be interesting is, you know, one's going to get broken and one's going to get rejected. It's not like they're each the same's going to happen on both, but it's as you said early on, this is such a debatey, tricky spot to be like trying to understand what the market's doing, and seeing where the pivots are and seeing how the Dixie and Bitcoin are interacting with that just adds credence to it. It's crazy.
Yeah, and if we look at like further supporting evidence that like we might be at a local top, it's like, so here's the S&P 500, which is one of the indices that I like to look at. Like we're at the top of its range. And this is the range it made from the beginning of 2022, essentially. And we're just consolidating, chilling at the top here. Um, and now if it starts closing up here, that'd be sweet. Like that's what we want to see. But
Mm-hmm.
right now it's just showing rejections off the top. And it's no coincidence that, of course, that, you know, it's because Dixie's bouncing. So I think the market as a whole is just really trying to figure out its footing right now, and just
Was
kind of figuring out like what it wants to do.
Sorry to interrupt. Was that a golden cross on the S&P as well? Well, it was like the screen you had just before that.
Yeah,
Red.
yeah. So
I missed
yes,
that.
yeah,
I didn't even see
Golden
that
Cross.
before. Okay.
Hmm.
Wow.
Yeah, and it has like some other cool things going. I know you wanted to talk about like some Bollinger Band stuff, so we can
Yeah,
touch
yeah,
on that.
yeah.
But like, if we look at the weekly, it's like at the top of the Bollinger Bands,
Okay.
which for those who use Bollinger Bands, like that's the potential for a new trend to start. And if we look at like it's the Bollinger Band width, or like BBW, it's very consolidated right now. So it's not super consolidated, but it's pretty consolidated. It's the most consolidated it's been in a while. And the monthlies right here. So it's like it has this other mixed signal of like potentially getting rejected off the midline here, which
Gosh.
if we go back in history, like that should look familiar to you right there.
Oh, you're gonna pull that one out. Okay. Okay.
But I mean, it's uncanny, right? Like it's very similar. So if we look at the this was the housing crash, right? So
Right.
it fell down. It found support on the 50. This was the monthly 50 EMA. It found support, bounced, and failed to find support again. So there are some analogs from times past, but at the moment it's just kind of just like wait and see, honestly, because like it's just chilling in this range. And more importantly, it broke this downtrend, uh, this bear market downtrend.
Yeah,
So
that's a big deal to me. The fact that the
yeah.
so you had the falling wedge on Bitcoin breakup, you had the
Mhm.
Dixie roll down, you had the S&P and the Dow Jones break up from their downtrend. I, yeah, and also within that box that you have right there, kind of right above my astronaut picture, you have the first higher low in that entire sequence over like a year
Yes.
and a half. So you
Yes.
have a
Following this,
following um,
a run of the lows.
exactly, and then a higher low, and now you have a breakout. So I'm with you on it's very debatey and it's hard to know, but I kind of man, I'm feeling those little bull tingles. Also, with respect to kind of where we are, where Bitcoin is in the halving cycle and all. I don't know if you're a big believer in like the halving and it having an effect on things or what, but
Yeah. I mean, so I don't keep track of it, honestly, just because
mm,
I trade lower time frames than that mostly. So it's not as, but like from what I've seen, it's like pretty spot on. It's like marks the bottom, this X amount of time between having and whatever it is. I forget what the correlation is exactly, but so other thing to note, um if you guys like Ichimoku Cloud stuff, so if you're familiar with like Ichimoku Cloud setups, another reason why you would want to be bullish on the dollar is because it's obviously on the daily, it's clearly a downtrend, but it's starting to enter into this cloud.
hmm.
And if this thing gets a cloud breakout, the dollar could keep going up. Additionally, on the monthly, this is a setup. So if we go back in time, how do I do that? Boom. This setup right here, where you have this flat Kijun
Mm-hmm.
with a trending with a trend. So this is basically the equivalent of like a slow moving average and a fast moving average. But when you have a flat, slow moving average and a fast, quickly deviating, um, fast moving average, it typically means you're going to mean revert and then continue. And that's exactly what it did. So like if we look at the
C
what
clamp,
happened
isn't that what
next,
they call it?
yeah, that's called a C clamp. Go play, go forward, and of course here we are. So it stands to reason that like there's going to be a meaty little bounce there. And if we're looking at Bollinger Bands, we just tagged the midline of the monthly Bollinger Band too. So there's like, long story short, there's a not a huge list of reasons to be like, just kind of wait and see right now. Like, don't be terribly eager, because you could get your feelings hurt pretty easily here.
Yeah, don't. This is not where you pile on the margin longs or shorts,
Yeah.
really.
Yeah. Well, I mean, honestly, the odds are in your favor if you're short right now because it's like, well, I
Clip it, chat. Clip it and ship
so
it.
the odds are in your favor in a sense where it's like you don't want to long into resistance. You typically should be shorting into resistance, but the trend is up, so you're counter trend trading. So it's like, are you a level trader or a trend trader? you know,
Order blocks, bro.
yeah, dude. I still I've tried to understand it because I feel like there's some sort of correlation there with what did you just send me? What is this?
Yeah, yeah. This is just when you get a second, pull that up and take a look at that. But I didn't mean to throw your brain off. Sorry.
That's thrown. Okay.
Okay.
Oh, I see. Okay. So what is the idea that and the
So
pre-halving year it keeps running or what?
yeah, yeah, yeah. So it basically bottoms like the December prior to the pre-halving year, and then come January, like all the way into the sell in May, go away, that kind of deal. There's
Mm.
typically like a big impulsive move. Now, last time, like so in the white box on the left, that actually went to the R1 and then some, which is just like a pivot extension. Um,
Yeah, I remember this. Okay.
yeah, so in this instance, the pivot itself is like 32. So all these levels we're talking about, like blowing out all the shorts and everything, it would basically blow out
Yeah.
that last 30K short, and then give it all back, send it back to 20,000, 24,000. But because that's essentially what happened last time. But and again,
Yeah.
who the hell knows if it all happens again the same way, but it's just interesting to see it.
Yeah, so I've actually been on uh my original argument when we were down here, you know, was that I think we're most likely here. Now, if I'm looking at things objectively, obviously I just placed a lot of arguments to argue against my actual feeling here.
Right.
Um, and the the reason is if you guys want some like bull porn to dehydrate yourself to, um, we can go into that, but it's up to you.
Whatever. Hey, floor is yours. Go over what do you want to go over. Let's do it.
All right, all right. So on the daily, um, I love the idea of liquidity pools, just because it's like I know it's really easy to overcomplicate crypto because it's just so easy just to be like, if you're dumb as but you're right that one time, like you can really do well for yourself. And so if you try to really complicate crypto, like it can kind of bite you and really play against you. But one of the concepts that I really love is this idea of liquidity pools. And essentially what a liquidity I briefly touched on it here. But a liquidity pool is just like it's a logical place where people place their stops and or an extreme point of market movement that would liquidate people. So for example, like if you're 50x long, all it takes is a 2% move against you for you to be liquidated.
Right.
Okay. So if there's an obvious place where people are picking up, if there's like a huge open interest at a specific price level, you can kind of create like different, like almost like an onion. You can be like, have different layers, be like, this is where you liquidate 50x longs. This is where you liquidate 20, 25, like,
Yeah,
you can
yeah,
have these
yeah.
like cascading sorts of things going up. Um, and so one of the things that happens is during bear markets, you get these liquidity pools that form. And that's because we've never run the lows or the high. So we've never run the highs during the bear market, and we've never run the lows in the bull market. So what I mean by that is when you have these up only conditions, I mean that's sweet, but those have very painful endings if you're
Mm-hmm.
if you're not positioned well. If you're not hedging, if you're not doing whatever. And that's because there's no established support anywhere. Like when we were back here, there was no support anywhere along the way,
Yeah.
right? Like none of these lows got ran. So what that means is that people are just hyper exposed with margin and their stops are God knows where. And so what the market does is it just tests. It's like, well, what happens if I just like stick this knife between your ribs? How are you going to react, right? And so that's why when we see these reactions off the highs, we see if they're huge reactions, right? So like here, for example, off of the high, it dropped from this swing high to swing low 50% in like a week.
Insane. Yeah.
Right. So like that's because of people they're overexposing themselves, and they're either getting stopped out of margin, liquidated on margin, or they're just panic selling. Like they could be just on, they have their spot and they're just like, they just want out. They hit their pain threshold. Right. And so that's that's how bear markets form, is they're just constantly coming back down. So like if we go back in time, and we look at like these different levels that formed our support, or like the extreme lows, they're almost always correspond with swing lows, and we're like creating pain points for people of the prior market. So what I mean by that is, like, during the bear market, we put pressure on the people that were late to the bull market, and during the
Right.
bull market, we put pressure on late bears. And so right now we're really positioned well for a run of all of our liquidity pools during the bear market. So we hit our first one. Our first major milestone was this guy. Okay. Next major milestone is this guy. And this is really the last one.
And I'm not
I,
even really happy with that first, like, to say we ran the first one. Like, those
right.
stops are still safe technically, right? Because
Yes.
if they were a dollar or two above that level, they're fine. They really haven't been hit yet.
Yeah. Like if we look at like it,
I mean, it ran like what, 20
it's
bucks?
it's 0.15% above.
Yeah,
So like,
$37 above.
yes. So like, and that's the same on like other leverage. So this is Coinbase, and a lot of people ask me, why do I use Coinbase? It's a lot of volume, but the most important thing about it is there's no leverage on their exchange, and so
Mm.
you get more of a true look on like what
It's like
retail is
pure.
doing.
Yeah.
Yes, yeah, it's more of a pure signal. Like I understand that uh Binance has more volume, but they have margin there. They have accusations of wash trading there because of their low fees and like all
I,
kinds of other stuff that
didn't they
can
go to
limit
zero
signal.
recently? Like not too long ago, 2 months ago, something like that. They went to zero fees. So yeah, now it's like who
Yes,
knows?
yes, yes, exactly. So when you have those sorts of things, yeah, like just when we go to, where's Binance? If we go to Binance, like, wait, where is it?
Yeah, I know
This
what
is the
you're looking
chart.
for. I know what you're looking for.
Yeah, there's like a very, oh, I wonder when they implemented zero fees.
Move it.
Like,
Yeah,
could
move
it
it
be?
by my face. Keep moving it over.
Sorry, sorry.
Yeah,
So
it's
if we go
ridiculous.
here,
Yeah, yeah. Oh, I wonder when
yeah,
did zero
like
fees come in?
is this organic or what?
Get out of
This
here with
is
that.
clearly GMO here.
Yeah.
Um, anyway, so like when you look at Coinbase, it's just more of a pure signal, in my opinion. But the exactly what you were saying, like, I you can argue that we really didn't run this. Because typically you see these like knifing moves above, they get people to go, oh shit, and they sell, and then immediately it goes boom, right?
Yes,
Like,
that's what I would. Yeah, I would take that very serious if we got that, but we don't really
yeah,
have that.
but we didn't, and so this can go one of two ways. Like it's either, I think there's, if we do keep going down, I think we form this right shoulder and then we break out,
Mhm.
or the analog to the prior market is, maybe we're here, or maybe we're here, right? If we look at this guy,
Yeah, and that's
this
kind
is
of
very,
that kind of correlates with what I sent you earlier. That
yes,
option.
yes, yes, exactly. So like in the other picture that Jack sent me, like we would be right about here, which is like the prior pivot, I think, or whatever.
Hmm. Hmm.
And so we see these exactly the same thing um, in the prior market. God damn it. In the prior market condition. Um, what is it? Oh my God. I've got,
Did you do that through Zoom?
yeah. How do I delete you? Get
I
out of here.
don't ask me how annotation Zoom stuff works. I have no clue.
Okay. Yeah. I like it. And then no, another one. All right. But if we look at like just when things started to get really, really extreme, like here, when things really started going crazy,
Hmm.
they all corresponded with running liquidity pools. So like
Yeah, yeah,
liquidity
yeah.
pool here, boom. Of course, this guy, boom. And of course, it topped out right at like, this is what I would consider to be the real beginning of the bear market for 2018. And so that, of course, topped out our market. So if we look at like the analog of that, where we just ran all these highs and they consolidated and bear trapped people early, like on these dips here, like this is a bear trap, right?
Hmm.
Um, there's a really strong argument that we're positioned well for the same thing this time around. where
See,
maybe we do this.
yeah,
Go
yeah,
ahead.
keep going. Yep, sorry.
Yeah, so maybe we do this, right? And then we go see strong move up, and he goes boom. We go bear trap, boom, and we keep going. And I think ultimately, pie in the sky is we run that, and then we do exactly what you said in this picture here, right, where we see our blow off top, like right in here. So maybe the market comes up like this, boom, and it comes back down here. Because isn't technically the R1 like in here or something like that?
Exactly. And the pivot itself is at the end of December 2019 that it found support on the pivot. So it's like 6K ish was the actual pivot for that year. And then the S1 was
Oh,
like
like here?
10K or something. Yeah, yeah, exactly. That's
Yeah.
about it. So that would be the idea. It's like, okay, what if we have a blow off, 30, 40K, whatever it is, and then we come back to 24. About the time everybody's like convinced we're gonna have an all-time high at the end of this year,
Yes.
get all
Yes.
nice and horned up, and then they just get rugged.
Yes. Yes. Exactly. And I mean, there's like a lot of reasons to do this. Like if one of the charts I really love to look at, and I don't know why, I swear to God, Zoom. One of the charts I really love to look at, that you can really find a lot of there's a huge edge to trading this, is looking at the CME futures chart. And this is, oh, by the way, just to add for some further bear porn, this huge RSI bear div here.
Okay, I'm gonna pause you for a sec because I've been cracking up with chat. They've been calling you a psychopath for having white charts. They're like, is this guy sitting out in the sun? Is that the only way he can see?
So that was because the original reason why I started using. Do you know why I use a white background?
No, I honestly have no idea.
Because, dude, when I first started making, I'm gonna say in air quotes, content, was because on ETH Trader, I used to take a white background and cut and paste it into Paint so that I could annotate on it. And
okay.
And so I used to use a Wacom tablet when I would stream, and it has a pen, and the ink was black, and like it was the only way I could like annotate on it. And so
Okay.
I just kept it. Also because I'm a psychopath. But
suck it, chat. Flashbang.
yeah, so there you go. But what I really like about CME futures chart is all these levels were very predictable based on this idea of gaps being filled. And the general idea is that when you have a giant gap, like here, for example, where I have it labeled huge gap, that this will ultimately get filled at some point, because these represent huge market inefficiencies. And this was when the market gaps up, if you were, say, for example, you were short here and you have your stops in here, you get filled at the open price, not at your stop price, and vice versa. So if you go long here, your stop price, it gets filled on the open. So typically what ends up happening is in bear markets, we go back and retrace them. And that's exactly what we did. So we retraced this huge guy. And what's interesting to note is that we never consolidated in these things. And so what is likely to happen is a lot of times markets will create these levels where it's just like, it just doesn't go, it just jumps. It's like a power level. Like, when you're doing like chemistry and you're like, you have your little, your little, what the hell is it called?
No, I'm gonna let you squirm. I'm gonna let you. Oh, okay.
Your orbitals, right? Isn't that what it's called?
Yeah, that is what it's called.
Yeah. You have your little energy levels, whatever.
Your electrons, yeah.
Yeah. So it just like jumps from one level to the other. Sometimes the market will create stuff like that. And this is like, if we penetrate into this area, very good chance that it doesn't stop here. It keeps going. Like that's what we saw in the prior move, right? Like here's the giant gap in here. We just went straight through it.
Turbo sent.
So yeah, exactly. So like if we do break out of here, I don't think it's going to be a grinding move. I don't think it's going to be like one of these things. It's going to be like just nuke it up to here, consolidate, nuke it up to here. I think that's most likely going to happen.
Oh man, and all that with this backdrop of the death cross on the weekly, the golden cross on the daily, like all this, everyone's kind of like got their question, these big question marks over their head, their arms shrugging. Like I wish it was
Yeah.
easier to know, but this is one of the most complicated trading environments I've ever been in.
Yeah. Like, and the other thing too is like, if we look at, do you look at Grayscale at all?
I do actually because I'm stuck-ish. I'm like basically break even right now, so I'm really paying attention to it. Because
Mhm.
I have money on the in the traditional markets that it's like that's where it stays. And so back at probably the $15 level or $12 or $14 level, something like that. That's when I was like, oh hell, this is great. This is like the biggest discount we've seen yet in its history and all this stuff. And so I
Yes.
went in pretty
Yes.
hard there, and then it dropped like another 50%. And that one gigantic candle that got me. But I didn't panic sell or anything. I've just been waiting it out. Now I'm about break even again, so I'm paying pretty close attention to it.
So one of the things that is a really, really good check in the bull column is the fact that GBTC, which is Grayscale Bitcoin Trust, they last week's chart closed a bullish engulfing. So it followed up that
Oh.
giant shakeout it had as a bullish engulfing, and additionally, it found support on the weekly midline of the Bollinger Bands, and
Mm.
you can see very clearly that, like, so this is one of the things that I really love about Bollinger Bands is like it's it's really a one stop shop for like just defining trend or consolidation, and like when the market's above the midline and trending upward, it's a bull market, and when it's below, it's a bear market. And right now, this is like early signs of bull market behavior. We're above the midline,
Yeah.
and we saw this nice bullish engulfing. We didn't close back below this midline, and so really, what we want to see is we want to see. So there's a couple of there's a bunch of setups for Bollinger Bands, but one of the ones that I really like is it's called riding the bands. And what it is like when the market closes like right around this, you can see like it. Um, Here's an example of it. When it closes right around here, it tends to stick on this line
Huh.
and ride the bands. And when it starts deviating from it, then the trend is usually concluding or consolidating for another leg up. And we saw this in 2019. Here's 2020.
And these are weekly candles, chat. So that's like 3 months
Yeah,
worth of
yeah.
activity. That's not like just a
Yes.
day or two. Wow.
Yes. And it was obviously a bit choppier um, on the ride down, but if we start closing like right on this band, uh, that's a good strong signal. So like this sort of riding the band activity we also see on Bitcoin as well. So like here's we are currently set up to ride the bands at this exact moment.
Mm.
Um, so like here, for example, I think very clearly just stuck on that upper band. And it starts deviating a little bit, but then it immediately resumes back up. And this is also a really great overbought or oversold signal. So typically when you see the candles, this is just a general rule of thumb, but like when you see the candles closing outside of the band, um, it's really tempting to want to sell because it's like, oh, this is an overbought signal. But usually it just means that the next week will just consolidate sideways until it gets back on the band and then it shoves up. So like here's an example right here where it closed above and it kind of just chilled until it like got back on there. And then we see the first major close outside the band. It saw a red week, but all it was ultimately was just a sideways thing to glue
Mm.
us back onto the side of the band. So right now we're set up for something like that. So getting rejected here would not look good for a bull case. Again, another reason why we don't want to see the weekly closing anything weak here, because that is I think I mentioned this to you when we were um, talking on Discord or something, but like that would be in terms of Bollinger Bands a trend failure
Yeah. Yeah. Okay.
because it's not like a trend. We want to see it glued to the band. See
So
it glued to the band.
chats used to me talking about failure to launch and that kind of stuff, which is just like colloquial, you know what I'm saying? It's just a nice,
I
easy
have
way of
no idea what you're saying.
colloquially, colloquially. Yeah, it's just like the common tongue.
colloquially.
Thank you. Yeah, that. But like failure to launch would be you have a clean Head and Shoulders that starts to break down and then it goes to the moon, or like a falling wedge starts to break up but then it nukes back into the range and down to the bottom
Yes.
side. So
Yeah.
it's the same idea as what you're talking about.
Yeah. Falling wedges are notorious. Dude, those are like those fail more often than they actually play out. Like there's that if you're looking for blue ball fuel, like that's it. So here's another example of Bitcoin. So this is back in 2017,
Okay.
where it's just riding the bands, and you can see like even when really hit the fan, all it did was just hit the midline, bounce, and resume. It was only when it started closing back below the midline that like the trend was over. Um, so
And that's
you're
when on the kind of the daily and 12-hour, that's where you were pointing out the Wyckoff distribution. And that changed my life. I swear to God, like that changed my perspective on everything. What, like right there,
back in the day.
yeah, 2017, like in December 2017, because I remember you were on Reddit and posting your charts on that and how the parabolic run turned into a trade range, and we had the upthrust after distribution, and like you were kind of going all
Mhm.
through it, and man, that was like a defining moment in my life. That was crazy. Like that
Yeah.
set the stage to where like us right here having this conversation. Like that's insane.
Yeah. So like sticking on that Wyckoff theme, like I mentioned stopping action for the ride down. Stopping action also applies on the ride up. So we see like the swelling volume here, that coincided with the top, obviously all-time high volume at the time. And then if you see weakness following, this like major uptick, that's usually stopping actions. And so vice versa, here's that. Like it showed major weakness, and then the counterpart was strength coming out of that. So like these sorts of principles apply both bullishly and bearishly. The stopping action and like the rejection of the hyperbol. What am I trying to say? Exponential growth or exponential
The,
loss.
the yeah, I got it. Okay. Okay, good stuff. Chat. By the way, if y'all have any questions for Schmitty, let me know. Put it in the chat. I've been laughing at y'all trolling him on the the brightness. That was still funny. But one question I did see, I think one of my mods asked me this. Maybe not. I can't remember where I heard it, but somebody was saying they understand that you have a really nice macro view on, say, equities and Bitcoin and Ethereum, but what
Mhm.
coin do you actually like to trade? Like, do you have like, oh, Solana is my favorite because, or whatever. Like, do you have some kind of favorite outside of the majors?
No. So
Okay.
I almost exclusively trade Bitcoin, and I will trade Ethereum sometimes. And I know that's like, I know I probably, to be honest with you, it's just a bandwidth thing. Like like a mental bandwidth thing that
Yeah.
like the way that I am able to make sense of the market and not go crazy is that I look at how things relate to one another. And so when I start to get to other things like Solana or other like obscure Solana is obviously not obscure now, but it was at the time. Um, when you start to get more obscure things, it just becomes so far removed from what I can logically make sense of that I just get gun shy with it. Honestly, like I just can't bring myself to trade it because I'm like, it's all so reactionary to what Bitcoin does, right? So if we look at like the ripple effect, like Bitcoin's reactionary to equities, which is reactionary to the dollar. Well, if you look at Ethereum, Ethereum is reactionary to Bitcoin, which is equities dollar, right? And if you
Yeah.
look at
It's like a
all the stuff, it's like,
snowball.
yes. And I'm like, and it just gets to the point where I no longer can filter out the relationship. And it's no surprise that a lot of times these coins just happen to be scams. Like everyone
Yeah.
was pumping Solana because they're like, oh, SPF's got our back. He can't tie your shoes, but he can run a hedge fund. Am I right? Like that. Do you remember that old meme
Hey,
when he got?
but he got some action. You know what I'm talking about? Like he outplayed most of CT. Like let's be real. So maybe maybe there was something to it.
Yeah, he got some action because he's high as on amphetamines and banging his little his Colt.
All right, moving on, moving on. All right, follow-up question. Um, what is it? And I don't even know this. And I'm kind of embarrassed to say. I think I know. I could roll the dice and guess. What's your take on NFTs slash these new NFTs on Bitcoin, the Ordinals or whatever? What's your take on both of
Okay,
those?
well, first of all, that's the first time so because I'm so far removed from this stuff, like I missed all the NFT stuff. It was
Okay,
just because
me
I didn't
too.
understand it.
Yeah,
I did not get the value. Like I get the meme value of it, but I cannot for the life of me ever understand how like a pet rock was valued at like $10 million.
that was good.
Like that
That was
makes no
good. Yeah,
sense to me, dude. Like
you just don't
I
get it.
get I I know, like I guess that's just me being a boomer, but like I I'm not a boomer, by the way, guys. I'm like in my mid 30s. But
Grandpa.
the I get the tech in a sense where it's like, oh, you can assign like ownership, like unique ownership of these things, and I get that. But like the market for NFTs, I never got, and the fact that you just told me that you can have NFTs on Bitcoin
This
is
is new. This
surprising.
is new. This is like kind of breaking news. Like 2 weeks ago, a week and a half ago, something
But
like that.
how is that possible? Are there smart contracts or what?
So this is like my very 20 IQ perspective on it. Bitcoin, the code was adjusted a, a few years ago to allow for faster payment. It had something to do with the way data was organized in each block, and that is being effectively the Bitcoin maxis would say that's being exploited, and the other side would say no, it's just an option, so they're using it, and they're doing it in a way to assign ownership to NFTs, but it's only through the Bitcoin blockchain. And so people are like, this is a scam. This is going to cause the next civil war. These are some of the other conversations. And so what I think is interesting is perhaps we are seeing the sprinklings, like the scent of what could be a big issue in the next bull market, and the thing that causes
Hmm.
these 30% pullbacks, or the headline of Bitcoin civil war ramps up, or whatever, you know what I mean? Kind of like how Bitcoin Cash played out in 2016, 2017, all that
Yeah.
BS. So who knows? I don't
Okay.
have, I have not done a deep dive, but that's kind of like the generalization of it all.
Okay. So just so I understand this correctly, so they're not minting NFTs on Bitcoin. It's just that ownership is being delegated on
Chat, help me with
Bitcoin.
this, because that's it. Somehow you do mint it through Bitcoin, but it's done in this very precarious way. That's the Bitcoin maxis are pissed off it's even happening. Like it's like an exploit essentially. So is what they're arguing it is. I don't. Ordinals are the serial number. Inscription is waste data assigned to individual satoshis. So you can only see the inscription through a lens, which is some kind of application or site or something. It's written into the witness data. Yeah, well said, Skillet. Okay.
Okay. So is there a physical NFT where you're like that corresponds with
You're
data, like
this
a
is beyond me. Chat, if y'all know, y'all feel free to answer, but I don't know anything more than that. Yeah, so from what I've heard, like on Twitter and stuff, it's actually it's remarkable. It's effectively like they figured out like an exploit in a website or something. Like they figured out a clever way to do something, but it's not necessarily like it was made for that. Like NFTs on Ethereum, that was basically like kind of everyone understood, okay, this is the game, and it's by design, this is something we can do, but this is a little bit different.
huh. So pseudo smart contracts. Not true. Okay. So okay, if it's a pseudo smart contract, doesn't that mean there has to be
Hey. I don't know. We'll do a little. I might have to do a video on it or something, because I
yeah,
need I need to
that
figure this out, and I don't have it figured out at all by any means right now. They're
it
filling the
sounds like
Skillet said they're filling the 4 MB block with a JPEG, and so this is like if you look at transaction fees, or the what's the word, the it's like how much of each block was full. There's a word for it, and I'm blanking on it because it's late for me.
oh
but it went from, you know, average usage 10 to 20%, that kind of thing. And everyone, the Bitcoin maxis, kind of looked around like, yeah, this is great, because as we grow across the world and we have Bitcoin Lightning and stuff like that will fill up the blocks. And we got plenty of space, everything's good. The freeway is more than big enough for all the traffic, not just today, but 20 years from now, that kind of deal. And now it's like, boom, everything's bumper to bumper because of this, you know, these NFTs.
Oh.
So this is and so by default, it's going to raise fees. And this is the word, just like when Ethereum was kind of maxed out in usage, it also raised the fees. So this is what's kind of got the maxis up in arms. So
yeah. So what is the idea that there's going to be some sort of hard fork?
Yeah, potentially. And I've heard a lot of arguments to lower the block, because if they can get it under a certain threshold, then the ordinal game can't take place. It requires a certain size, from what I've seen.
You know, Roger Ver is just sitting there. he's dehydrated so much right now. What is that guy up to? What is Bitcoin Cash still a thing?
I don't think so, but I learned not too long ago that he was a seed investor in like everything. Like,
oh yeah,
everything that's out there right now.
Wasn't he one of the original Ethereum like the Ethereum Foundation? What was it called?
Yeah. The whatever that launch was. Yeah. He was there. There's several exchanges he was a seed investor on. Like, he's with Anderson Horowitz or whoever, that, you know, the A16Z. He works with those guys for seed investments on like several coins. Like, I mean, he's doing okay. Like, I know Cash didn't work out and everything, whatever. He took an L on that, but you know,
but
he's not starving.
W.
Yeah. Let's keep it straight. He's doing okay.
Yeah.
All right. Oh yeah. This is the other thing Skillet pointed out, because I saw this. You can basically burn your ETH NFT, your Ethereum NFT, and swap it to a Bitcoin. And so
what?
Yeah. There's like this little way of doing it. And I saw somewhere on Twitter that somebody did that to one of their either their mutant apes or their bored apes or whatever. You know, one of these like blue what do they call it? Blue gem? What's the term? One of the top NFTs. Like, what do you call like a blue chip? Like a blue chip stock?
Oh, blue chip. Yeah.
Like one of these blue chip NFTs. People were doing that as well. Yeah. Bored Ape Yacht Club. 2 apes. That's crazy.
That's what it is. Bored Ape Yacht Club.
That's insane, man.
So, but aren't those the ones that are like super, super valuable?
Yeah. Like hundreds of thousands of dollars each of them.
It's crazy. Dude. I to this day, I still think about that guy that like smugly posted. He had like an offer for like $7 million on one of his NFTs, and he was
why I turned it down, that one.
Yeah, and then like that was literally the beginning of the bear market.
Gosh, that, and like you said, the rocks that were like one went for over $1 million. It was like, come on, guys, what are we doing? What do we do? This is why we're gonna lose it all. We're gonna give it all back because of stuff like that. Y'all couldn't just keep it together for like 6 months. Anyway, well, good, man. Well, look, what else do you want to go over? What else you didn't really touch much on Ethereum. Is there anything that's worth looking at?
Talk about Ethereum. Yeah.
Okay.
So Ethereum's again, no surprise here. So on Coinbase, or I'm sorry, on Ethereum, there's quite a few things going on here, but the most important thing, the most relevant thing is again this weekly bullish engulfing, but what it's testing. So right now it's testing the low of the this was basically the swing low that marked the bottom of its. You could argue this is a trading range. It's not really, but
it's ugly. But I see what you're talking about, though.
So if we close back inside this range, which is like a pixel above where it currently is, so if it closes back in here, that's a strong sign of continuation. But it has this like weekly thing it's battling here, where it's like bearishly. So you know, story of the stream is that it's like who knows kind of thing. It's like indecision. Currently running into resistance, currently running into the 50 EMA, and it's like if it closes above it, that's all full steam ahead. It's
send it. Yeah.
yeah, it's ready to take out all the liquidity pools, and most likely will outperform Bitcoin because the ride from here to here is 116%. So, actually, I don't even
Why'd
know
you
what.
pick that level? Like the top for the 116%? What is that, some
Um,
horizontal?
no, no, no. So it's the top of the liquidity pool.
Ah, got
So
it, got it, got it. Yeah, I'm
yeah,
with you. Okay.
and these tend to be logical targets. Like, a lot of people look at like this sort of thing, but usually the market won't come up and get rejected off of here. It'll come up, blow through that, and come back down.
Right.
Yeah. Um,
Okay.
yeah. But yeah, so Ethereum looks good. And the thing that is really catching my eye on Ethereum is the Ether Bitcoin chart because it's, oh, it's a weekly chart. Okay. It's been just Cosby sweatering this thing, but it's consolidating really tightly, and it's sitting right below this resistance here that's been present for forever.
Ever.
So if for whatever reason Ethereum can pop this, like it might really do well. But that would be saying, like going against what happens historically, and what happens historically is that it has like one pop and then it just kind of chills.
For like 3 years.
Yeah,
You
like
get
that's
your
kind of its mo.
you get your 50% move and then you just sit on it.
Yeah, but so one thing that does have me sketched out about the Ethereum Bitcoin chart is so it has this like kind of nice range, but the fact that it's been consolidating in the top half of the range
Yeah.
usually is a sign of distribution. Um, but again, it's a giant like who knows kind of thing. But it is consolidating nicely, and
I'll add that every time I think I really have my arms around what FBTC is doing, like April 2022, it consolidated and it started breaking down. Finally, you could draw this nice little pennant or wedge or whatever,
yeah,
and it
about
finally,
this thing
yeah, it
where it's like this thing.
right, and then it breaks down. You're like, okay, the trend's broken. We're going down. Maybe we come retest it, whatever. But like, it consolidated for a year or whatever that was, and then it broke down. Thank you, market. Now I understand what's happening. Nope, came right back and ran the highs and then just drifted to the right for another year. So I've kind of
Yeah.
given up on acting like I know what's going on with Ethereum.
So this is a perfect example of what I was saying before of like this is a derivative of a derivative of a derivative where it's like the signals aren't very clear.
Yeah.
So like when you see these things like this where it's like, oh, you have this uptrend, you have this diagonal gets broken, and it's like you expect that this thing is just toast,
Right.
and then it's not. I mean, I think technically this ran the price move of it. What is it? 0.02765. No, this definitely underperformed.
The target or whatever.
Yeah, so it should have gone on here. Like, it makes no sense that it reversed there for no reason.
Yeah.
I mean, other than the fact that like it ran a low, but yeah, it's
Yeah. So now you're left with the trade range idea, and I'm with you on that. So it's just kind of a waiting game.
yeah, it's a waiting game, and like without even looking, I would imagine these monthly Bollinger Bands are probably, yeah, exactly. Like they're super consolidated. So what that means for Bollinger Band traders is if you have a squeeze, which is like the bands are compressing, that usually is a sign of forecasted volatility, is how John Bollinger describes it. It's a forecast for volatility. And so when you have a squeeze, that means it's like, oh, it's a visualization of a consolidated market. So wherever this goes from here, it's going to be a big move. So these are
And
monthly.
like a sustained move as well. I think that's what
Yes,
you're saying.
yes,
Yeah.
yes. A strong sustained move. Um, yeah. So if this does break down from here, I think there's going to be some really sad ETH maxis. But the fact that it closed below the midline, like that's usually not a good sign. So
Is that an M top? Is that classic anything in
yes,
Bollinger terms?
yeah. So it's a little bit of a dirty one, but yeah, this is a monthly M top here. A better example would be on Bitcoin. There was a monthly M top here. So if we,
Oh, for the bull market top?
yeah,
Oh,
Yeah,
wow.
yeah, yeah. I don't know why that's there, but yeah. So this was a giant M top here.
Huh.
Yeah, and it was like this was literally the most
It's
crispy,
perfect.
clean volume profile is perfect. The close give you a perfect entry for a new bear market. Um,
And the
yeah,
target is the other side of the Bollinger Bands, and look what it did.
yeah.
Right?
So
Isn't that right?
and that's the bottom. Yeah. Well, so it has it has two targets. The first target's the midline, second target's the lower band. So typically the rule of thumb is like you take your first profit here, and then if it closes back below the midline, it means it's going to the lower band.
Mm.
I mean, there are some instances where it doesn't do that because you see this, but for the most part, that's the general rule of thumb. So like
Wow.
the way that you trade it is um I like M tops that. Do you know what an SFP is? A swing failure pattern.
Yeah, yeah, yeah. We talk about those a lot.
Okay, so if you can get an M top that's also an SFP, those are really good.
Mm.
And if it arrives on lower volume on the second high, that's a really good setup. That's like, in my opinion, that's like a 10 out of 10 setup. So the way you trade it is you enter short on the close, and you put your stop above the swing high, or sorry, above the upper band is the stop that John Bollinger uses. So you enter short here, or you close your spot or whatever, and this is your, it's a terrible arrow, but that's your
Yeah.
stop is above
Okay.
that.
Okay. So,
So
and I think chat has a question for you here too. So on this
yep.
chart, has the target been hit with that little slap of the lower the
Mm-hmm.
lower bound of the Bollinger Band, or is there like another run of the lows coming? That's kind of what the question they had is.
So if I understand the question correctly, you're asking here.
Yeah, yeah, and let me ask it just a different way that'll make it super clear.
Okay.
So, yes, was that where you just highlighted? Was that the bottom, or will the Bollinger Band lower bounds be run again? Which is like 5K or something right now. Like it's that in the cards.
So typically, if you're when you're doing a trade setup, you have a take profit in mind, and then once the trade plays out, you're out of the trade, and then you're waiting for the next setup. So this would be considered concluded for the M top. You had your take profit one here, take profit two, and you should be out of the trade here.
Okay, so
But
yeah.
what's most important to note about this though is that um so we see the riding the bands up here.
Mm-hmm.
A strong bear market should see a riding of the bands to the downside, and we don't see that. It had the opportunity to, where it
Yeah.
went band to band, and it didn't. It bled to the inside, and that is considered a trend failure of to the downside.
And not only
Right?
that, it went band to band, it drifted, and then it had the FTX
Yes.
fiasco. Like as
Yes.
you said, it had every opportunity in the world to actually do that, but it didn't.
Yeah. So like here's a perfect example before. So like this was 2017 here, 2020 there. Um,
Nice.
Now it should be noted that like there's not a whole lot of price history for bear markets on monthly. So like if you look at the weekly, for example, like gives you a little bit better signal where you see that it had the opportunity to ride the bands again and it didn't. In fact, it ran to the upside. So this would be considered a trend failure for the downside. Um, but yeah. So to answer your question, uh, I mean, maybe that happens where it runs the lower band, but that's not the trade setup. Like, there's
Right.
nothing about this that says you should be looking for that. Um, if anything, like you should be way more optimistic because you see down here. So this is the this line right here is just the Bollinger Band width, so you can see it like as the band narrows, the thing goes down.
Mm-hmm.
Right, so as it squeezes, the width goes down. You can see here that like it consolidated very tightly, and then we are hooking to the upside. So like this tells us most likely we're probably going to see a retest of this midline, which is 33.7. It's essentially a retest of this prior swing low. This guy.
Yeah, that's where I'm at. I mean, that's why my pin tweet is kind of what it is, and it's like a series of things. But yeah, I have a hard time shaking the Bulls setup. Now, obviously, there's a lot of things that can happen, and we'll have to revise, that bullish take. But gun to my head, man, this looks good.
Yeah. So the big takeaway is like if we see a close above the mid, so say maybe best case scenario we come up here and the bullish close up here, that usually means we're going to run into the upper band here.
Wow,
So like so
imagine.
that would be up here, which is well, obviously it's going to move by the time we get there, but here was that liquidity run I was talking about here.
Yeah, yeah, yeah.
If it comes up here, it's going to meet the upper band up there.
Unreal.
So, yeah.
So I'm not a chat. Just so you guys know, I am not a Bollinger Band expert, but I respect the hell out of it, and it is tried and true, and it is objectively one of the best systems that are out there. Um,
Mhm.
how? So I saw the upper band on the monthly Bollinger Bands for Bitcoin. They were effectively flat since the bull market top. That was on your monthly candles. How long does it take for them to actually start drifting? Is it like 20 candles lengths, or what is it?
Oh, it takes a long time. So, yeah,
Oh,
let me
look,
go.
yeah, look at the whole last bear market. It actually it was the same.
Yeah, so here's Bitstamp, has a little bit more price history on it. Um, it takes a long time, but you can see that the squeeze that happens, what manifests coming out of the squeeze is a strong move.
Mm-hmm.
And this happens every time where we see a squeeze. You see a squeeze, and we don't quite see the squeeze yet. So this is further supporting evidence that like we're not going to see up only, most likely. We're going to see something that probably does something closer to this, where exactly like what you were saying,
Make a
market comes
move.
up,
Yeah.
hits the upper band, comes down, so it does something like this.
Sell May,
And
walk
then,
away.
yes. And really the big takeaway is like, what are the bands doing? Like, are they consolidated? And you can see quite clearly that the trend of the Bollinger Band width is expanding, not contracting, which is, we want something like this, where we see that they're necking. And if you get this compression of the bands paired with a close on the band,
Mm.
that's like sell the wife and kids, leverage everything kind of setup, because those are historically very, very, very strong indicators of future price continuation. Um, and it's happened. I know only sample size of 2 here, but like if we look at any other market,
Yeah.
like that's what we see. Like that's what's so great about the Bollinger Bands, is that they are good on any market condition, because all it is just measuring the strength of trend and consolidation, and it's like a one-stop shop for everything you need.
Man, I love this because I got Josh Olszewicz, talking about his Ichimoku stuff, because that's all, like, he kind of lives and breathes that. Um, and I know you're a big fan of it as well, and you kind of have a different
Mm-hmm.
perspective. But and I now I get you to talking about Bollinger Bands, and I'm gonna have Bruce Frazier on Wednesday. Apparently,
Oh yeah,
he's like soft committed, and he'll go over what setups he sees on like all markets, Bitcoin included.
that's
So
cool.
yeah, so that'll it's pretty cool. It's been a while since we've had him on, but this honestly, this is the best part of doing this streaming thing, is getting to talk to all you guys, because I don't look at things like this at all, but it's cool how it overlays with the way I do look at stuff.
Yeah, I mean, so really the big takeaway from a lot of this stuff is that there's more than one way to skin a cat.
Mm-hmm.
And it's the way that you view the market. I remember I used to have a more of an absolutist approach, and it's kind of like the Dunning. Are you familiar with like the Dunning Kruger effect, where it's like you have this like inverse curve where your level of confidence versus like how much you actually know
Oh,
is,
yeah, yeah, yeah.
what I'm saying?
Keep
So
explaining it though
like,
for chat. Yeah, yeah. I know what you're talking.
yeah, so let me find it. Yeah. So can you guys see that?
No. Oh, there we go. Now I can. Now I can. It
Yeah.
just took a
So
second.
so the Dunning Kruger is basically just like competence versus confidence. So like how competent are you versus your confidence, and you can see very early on that like when you first start to learn a little bit of you think you know a lot, and as you become average, your confidence droops down and then it comes back up, right? So I remember very early on um, thinking that I just knew everything just because I was nailing home runs in a bull market, which is very easy to do.
Yeah,
Like you
yeah,
just
yeah.
throw something at the wall and it'll stick. And it took the bear market following the 2017 bull market to really humble me and like really show me that like there's a ton of different ways to view the market. And most of the time, because they're all using the same data, there's a lot of overlap. So I think that's why you see a lot of, like when you were asking me about the pivots, it's like I hadn't even looked at a chart with pivots on it like years. And it just so happens that it like overlays with all this other stuff because it's all using the same data. But it's, you just got to find what clicks with your brain. You know, it's like if Bollinger Bands don't make sense to you, that's cool. Like there's something else that probably will, you know, and like maybe there's a new way to view it that like neither you and I, you know, use, or probably not the stock to flow. It's probably not a good bet, but
Yeah, yeah,
other
yeah.
than that, you know,
Wait, what do you
there's
mean? I'm
uh
just kidding. I'm kidding. I'm kidding.
anyone checked on that guy in a while?
Yeah, he actually was tweeting the other day. I was like,
Really?
dude, really? Give it up. Jeez. Yeah, yeah,
Like
yeah.
like what is he saying at this point? Like
I think he kind of took a step back and he was like, you know how on his stock to flow chart, one of the things I actually really liked, and Josh and I talked about this a couple streams ago, was there was like those color bulbs, and it was like the closer to the halving you got, it would like change from like say reddish yellow to like a blue, and it like basically just shows you bear market perhaps is coming to an end based off the last four bear market lows, and that's what he was tweeting about. He's like, hey, look, the colors suggest we're potentially coming to an end, but it's like
this thing?
glossing over the yeah that yeah, so glossing
So
over the fact
coming to an
of
end here, or
yeah. So what he's basically trying to point out is that at that color, so call it yellow to orange, if you look back historically, this is let's forget 2012 and before, like just scratch that off the list, but 2015 and then into 2019, that those colors marked at or near the bear market bottom, and so this was his goal, but which is I guess reasonable enough, but it's like glossing over the fact that wasn't he calling for like $1 million last cycle or something like that, like he was like
no,
really
I
loud and
thought it was
proud.
I thought it wasn't his account 100,000 grand. Isn't that like his
Yeah, it is.
is
It's no, it's like a 100 trillion. What is chat? What is Plan B's? It's like 100 trillion USD, I think is what it
dude?
is. I'm
It
I
should be
could be wrong.
noted this is on Forbes, by the way.
Yeah, 100 trillion USD. Yeah. Creator of stock. He's got 2 million followers, bro. 2 million.
Well, he's got an account that is being featured in Forbes,
Well, that's fair. Yep, good comms.
but doesn't this? I mean, I don't know much about it, but doesn't this kind of look wrong? Because isn't the idea that it tracks this
Yeah,
thing?
right, right. So when he was tweeting, it was like he somehow removed that line, so it was only the colored dots.
Okay.
So, and so I was like, oh yeah, okay, yeah. That's I guess if you're gonna stick to it, that's the way to do it. Oh man,
All right. Well,
yeah, it's just silly. Anyway, that's all I know about him. Oh yeah, okay. I found his tweet. He says 25K like clockwork with like a very
oh my
confident
God,
jib.
what a smug little bastard.
Get out of here.
Totally
Get
nailed
out of
it.
here. Yeah.
Like clockwork.
God.
Suck it, nerds. What a dork.
What else you got? You look at anything besides Bitcoin and Ethereum? Or is that kind of where it stops? I know you said you don't trade anything else, but
Oh, I mean, I look at like traditional markets a lot more than I look at the other stuff. Like I look at gold and silver and
give us your take on gold and silver, and then we'll probably call it because it's been a
yeah,
couple hours.
yeah. So gold. Okay, so there's like the macro view and then there's like the generational view. The macro view is these are the weekly candles right here, and it's in a really well defined range. You can kind of argue this is like a bull flag kind of thing. But if we zoom out even further, it's like a giant cup and handle
I
um,
love that. Yeah.
here, which this consolidation has been taking place as long as Bitcoin's existed, essentially. Because the
Whoa.
beginning of the cup and handle started in 2011. So,
I hadn't thought
you know,
about that, but you're right, man. That's crazy.
yeah. So we have this giant cup and handle, and as long as it holds this level here, um, it's valid. So the price target on this thing is, people who only look at crypto are going to laugh at it because it's like not that huge, but it's dependable because it's like these are multi-year moves. And if we look at like prior price history of gold, um, it's like the last bull market in gold was from 2001 to 2011, so it was a decade, right? Um, if we see something similar like that, then it would extend another from this point. No, I guess we consider this the bottom. It would extend from here 2016 to another, 5 years or whatever. But the target for this is pretty nice. So we just take the bottom, measure it to the rim of the cup, and then project it upward. So, dude, TradingView does one thing that really irritates me. I'll measure something, and when I drag it, it changes the measurement.
Are you on log?
Yeah.
I think that's why.
Well,
Turn
then
log off, go back to linear, and it'll stick. Because when I do my measurements, that's what I have to do.
no, I never. Why does it move? What is the logic there? No pun intended. What is the logic?
Um, I guess with log, like because it's like it's fixed how you drew the line. It's not scaling it as you move up or down to match like the logarithmic.
But I'm measuring something.
I know.
You,
I'm with you. It's annoying. That's the workaround is like I have to go to linear, do the measurement, do the 1.618 extension, whatever, and then I click back to log and move on with my life. Yeah.
okay. Well, anyway, it's an 800 and so, I mean, it's not the cleanest neckline. Like it has a little slanted neckline, so we can kind of just do one of these. But it's basically a $950 move. So what we do is we just take the measurement and we project it to the breakout of the rim, which I would call this or this, and we could see that like if we take this sort of idea from before, like it seems pretty feasible that we could just kind of snake our way up for the next 5 years. So if you're looking for something that's like, not just sitting in cash in a checking account or whatever, putting it in
Yeah.
gold is probably not a bad move. But it's still consolidating. It hasn't broken out, and it's the nice thing about gold or metals in general is that it's not like sometimes you take a week off from looking at charts and crypto and you come back and you're like, well, I just missed the whole bull market. You know, with
Yeah.
gold, it's like you have a long, long time to get in.
Yeah.
Um, so silver has something very similar to it. It's a little bit dirtier. Like I'm mostly just watching this downtrend. I want to see the market closing above this downtrend. And again, these are weekly candles. But similar to gold, but much larger, is the world's largest cup and handle,
Oh, I hadn't
which
seen that on
is,
silver. Wow. Yeah. Okay.
yeah. So this goes back to the 80s.
Oh my God. With that little Wyckoff
So
bottom.
yeah, like clean as hell, right? Like looks really similar to Bitcoin back in 2019.
And even more
Um,
presently, really was what I meant. Like from 2015 on, like with the spring and like kind of above your yellow little slanty line, 2020,
oh yeah. This guy, yeah.
like the handle part of it. It's like
Hmm.
Wyckovian.
Yeah. So like if we look at this is absolutely huge. Um, off log because whatever. So we go here and we project it upward.
Oh
It's
my
like,
God.
yeah.
Infinity.
So I mean, like in my opinion, that's like pretty pie in the sky. Like I don't see a reason why silver would ever be valued that high. But it's fun to think about. And if we look at it not on log, it looks like a coin that just bounced, and it's like,
It does. It's a Doge
you know,
chart. Yeah.
yeah. So it had its bottom, it had its first little run. It's like bleeding out, and then it's
Womp.
probably to do another one of these. But typically silver lags gold, so whatever gold does, silver makes up for it like later on in life.
Yeah.
Um,
So I'll tell you something
but
funny. A buddy of mine's doing. He's a millionaire with more money than he knows what to do with, but he tries to be smart with it. So he saw a article about how, I guess because of crypto bros, or like at least they're being blamed for it. The the price of really nice watches like Rolexes and
mm-hmm.
APs and stuff they've dropped like a stone, and they've kind of like
Yeah.
maybe bottomed out, maybe not, who knows, right? But they've dropped a lot. So he likes the future potential price of gold, and he likes like a what could happen with these watch prices during the next bull market. So he's just buying solid gold, nice watches, and he's putting them in his safe, and so he has like a safe full of, I think he said he's up to like 15 of
Jesus.
just solid gold Rolexes, and that's his little investment. That's how he's playing it. It's like, okay.
Yeah, I I know some people that were like, and by some people I knew one, but he was like, just basically caught up in the everything bubble from like a couple years ago and just bought some Rolexes. Just like, I'm gonna flip these. It just like lost 50% of its value almost.
Yeah, right.
I mean, which isn't like, it's like there could be like if your biggest problem is that your Rolex isn't flipping, like you're a crybaby, okay?
Yeah, right.
Like let's like it's really hard for me to feel sorry for him, but um, yeah, it's I mean, a solid gold watch is probably not a bad move.
I thought it was a
Because
cool idea. Yeah.
yeah, especially so here's the big bet. So like if we're looking at like weekly, like super zoomed out views of metals, we should also view super viewed out views of the dollar, which is in this large channel
Mm-hmm.
trending downward, right? So it stands to reason that we're most likely at like a localized top here. And this channel's been valid since the 80s. So this is a 40-year channel. Now I know I went into the spiel about how the dollar is potentially bouncing, but these are different scales of bounce.
Yeah,
So like
yeah.
a bounce on the dollar that goes up to here was like that's a bear market in other asset classes. But like with metals, it's like these just move at different time scales. So like even though it bounces here and comes down, like this bleeding down to the lower bound here, that's like if that happens, then gold is going to have the most raging bull market.
Yeah, agreed.
I mean, the one that I showed you earlier, like that was this. Like this was the decade long bull market from 20.
I've never put that, two and two together there, but you're right.
Yeah.
Yeah.
Yeah. So like the big meat of the gold bull market coincided with this large bear market on the dollar. So like, if you feel like you're sad because you missed out on the big move, think bigger, think longer, think further ahead in time. And there's like some really, really good opportunities to just like get a slow drip and, expose yourself that way rather than just trying to get these like quick hits of dopamine from the crypto markets, because those can be really addicting.
No. 100x chat. Use my ref link, 100x all day. Keep it up. Thank you. Well, thank you.
You're a Bing X man.
No, they dropped me like an old girlfriend. So I'm out.
No way, really?
Yeah, they are doing this game where they go around and they like get with every person for just a little bit and then move on. But I had this long talk with them ahead of time, and I was like, I'm not in for that. Like, I'm in for the long haul. If you guys are, they're like, oh hell yeah, and then here we are. So.
Oh well, dude, they DM'd me and I just flat out ignored him, and I was like, I don't know. Yeah, so like they hit me up too, and I sensed some skankery was afoot.
I'll tell you some stuff offline. Yeah. But it was interesting.
All right.
It was interesting.
Dying to know, because I feel like sloppy seconds.
Well, I was, so don't worry. They hit up Wendy and Tom and everybody else first. So. No, but look, man, I appreciate you spending the time here. What else you want to cover? You got anything else?
No, dude. I just got off a flight. I'm like, I'm hungover right now.
Well, and you just gave us 2 hours, man. So thank you so much. And chat, we're gonna respect his time. Let him go. Thank you all for being here. We're gonna wrap it up. Be sure to follow Schmitty. I've had his Twitter name. Look, I'm pointing to it. This is kind of cool. Scrolling, and then also he is on Twitch, and he has committed publicly to stream twice a week. Every week,
dude. If I get my graphics card set up, like I want to stream more than that. Because, dude, wait. But before we go, let me just pitch this, because you got 190 people here.
Right? Okay, hit it.
All right.
And y'all all need to
So,
follow him on all this stuff. That's why I'm bringing that up. Okay, but go.
or at least monthly, as this guy said. It's like, you at least stream once a
Like,
month.
how about once a year? Let's start small.
Yeah, yeah, okay, baby steps.
Only if he uses dark mode, they said.
But yeah, listen, like, we'll figure it out. But what I want to do is, rather than, because you guys who know me know that I like to talk my off, and that's just not conducive to, you know, the human ear. So what I want to do is, rather than just sitting there doing market analysis all the time, I want to like fuse it with some video games, you know, like keep it light.
Yeah.
Like do like 6 hour stream, maybe like a 7 hour stream, bring in some friends, you know, have a good time, hang out, talk about crypto. If something cool happens, we'll stop for a second, talk about it, answer some questions.
I think that's the way to do it. And back when I would do that a little bit, what people really liked is like right below where I have your stuff scrolling, I would have the price of Bitcoin. And it was like it was like a feed from TradingView or something. So it was like live ticking, you know, up or down or whatever. And suddenly something big would happen, and I'd just run and dive in a bush in Tarkov, and we'd like tab out and look at it. So I think that's a great idea. I think people would love that.
Yeah, so stay tuned for that at minimum, or I guess at maximum. If I can like,
best case.
Yeah, best case. Anyway, yeah, thanks for having me, dude.
I'm not trying to be perma bulljack, perma bearjack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for, and nothing else. I'm not your hype man. You know, I'm not your bear guy telling you to sell.